Welcome back. I'm Michael Bull, and you're listening or watching the Commercial Real Estate Show. Today we're talking about retail and retail real estate. Now we're going to look into retail investment sales. All right, please welcome my next guest is John Harrison. He's a VP of the National Retail Group with Bull Realty. John, thanks for joining us here in Studio One today.
My pleasure, Michael. Good to be here.
Well, we appreciate it, John. And you've been in the industry for over 30 years selling shopping centers and retail properties around the Southeast U.S. And you're talking to, buyers and sellers every day and doing deals. A lot of people are suggesting that maybe values have peaked out here in 2016 and that maybe we're at the top of the market. What are your buyers and sellers saying? What are you seeing?
I'm beginning to get that opinion from buyers and sellers. I think that there's been so much capital in the market. The interest rates have been low. There's been volatility in the equity market. So there's been a lot of capital chasing real estate over the last several years. And cap rates have reacted accordingly. They've dropped in retail. The centers that we're selling at maybe an 8.25 cap rate a year to a year and a half ago, we're selling at a 7.5 to 7.75. But investors now that can tolerate the risk of a multi-tenant shopping center that are buying or having to buy it as a 7.5 cap rate are starting to think, well, would I be better off diversifying my portfolio and looking at some single tenant net leases that I could buy at 6.5, 6.75 cap. So the sense is that the distance between the cap rates and interest rates will continue to shrink as interest rates rise, and that there's not a lot of room left for compression. So I think we've reached a point where the market is stable in the sense that buyers know where the cap rate averages are, and sellers' expectations about further compression, I think, have been reduced. So
I guess if you've been holding out as a seller for the top of the market, it sounds like that's where we are. It sounds like what everyone's saying. So what are the buyers doing? What are they doing to increase yields? Where are they buying? What's their interest today?
Well, the pension, the private equity funds are buying core assets still. So one of my groups that's a national buyer likes to buy around malls. They'll buy in submarkets. They'll buy outside of core areas and outside of the urban areas, but they want to be on the best street and across the street from a regional mall. But they will buy a property that may have not been fulfilled in leasing yet. So they'll inherit some risk and maybe pay for the opportunity to create some value over time. So the buyers that years ago may have paid strong caps only for a stable, fully leased property, now we're looking at opportunities that they realize are maybe just coming out of the cycle, coming out of the downturn that haven't been fulfilled yet, but will be one day. So they're willing to take on maybe more lease-up risk than they would have in 2003, 4, 5, for instance.
Well, that makes sense, I guess, because they're looking for yield. They're looking for ways to increase their profits and have kind of a little bit of value add there. So what about the private investors and family office buyers? Are they changing kind of their criteria?
Yeah, some of the buyers who were active buying out of REO, for instance, back in 2010, 11, and 12, now realize that the markets have stabilized, that if they're going to compete and be active, they're going to be buying properties that are well leased, that are stable. But to increase yield, they're looking at secondary and tertiary markets. So Atlanta has, if you look at Atlanta as a metro area of all the major counties and are willing to buy out in Cartersville, for instance, or Gainesville, then there's still opportunities there to buy good real estate. There's not quite as much competition. So some of the private funds are acknowledging that to hit that 8 or 9% yield, that you may not be buying in Dunwoody, you may be buying 30 minutes outside of Metro Atlanta.
Right, and whatever market you're buying in, I think that's kind of what you're seeing, right? That some of these investors are not able to get the infill properties. Maybe they're going out to the kind of the close-in suburbs to kind of chase yield, and
sure,
and where houses are are selling again, right?
Oh yeah.
Yeah.
Yeah, an investor a seasoned investor called me recently, and he said, look, my son's in his last year at Tech, and I'm buying a home down in Midtown. Show me properties down in the Midtown market, or West Midtown, which is a popular market now. And I said, look, I'll find you some things to look at, but be prepared for cap rates that are below what you would buy a 15-year Dollar General at.
Right.
So we went through a few properties, and he decided to invest out in the suburbs. So the suburbs, you're now seeing even mixed-use developments and more urbanization out in the outside of 285 with a mixed-use project. So there are opportunities to invest in strong properties that are affiliated with or close to a large mixed-use development. So you get some of the energy and the traffic that you would in town, but you're buying out in Alpharetta, for instance.
Yeah, yeah. Well, you got to look around for some of these secondary markets and secondary submarkets to find the returns. And I want to ask you a couple of things, and we're going to take a short break. When we get back, I want to ask you about how many of your buyers are paying cash and how many are funding these deals at acquisition. Then, if you will, just share a couple tips for buyers looking to acquire properties in this market, and then for sellers, looking to sell in this market, which sounds like it might be time to do that.
Right.
So stay tuned. We'll have more on retail investment real estate. I'm Michael Bull. This is the Commercial Real Estate Show. Stay with us. We'll be right back. The Commercial Real Estate Show is brought to you by CCIM Institute, commercial real estate's global standard for professional achievement. Visit ccim.com/CRE show. That's ccim.com/CRE show. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Today we're talking about retail and retail real estate. My guest is John Harrison. He's VP of the National Retail Group at Bull Realty. And John, of the buyers acquiring property today, it seems like the lending market's got a little tougher underwriting. Are most of your buyers paying cash today, or are they financing at acquisition?
The private equity funds are paying cash at acquisition, and they will go and put debt on properties later. Sometimes they'll have to stabilize a property, so they'll choose to put debt on once they've hit an 85-90% occupancy level. But they've got the cash, so it tends to be a quicker due diligence, quicker close. The private investors and a number of the foreign investors are choosing to go with conduit debt or with bank debt, and the interest rates have been steady for the past 6 months. Rates have been 4 to 4.5%. So there's plenty of money to finance shopping centers right now.
It makes sense to finance it if you're getting rates at 4.5 and cap rates at 6 or more.
Right. Oh yeah.
It makes sense to put some leverage on it at least. And well, if you will, John, I'd like you to share some tips out there. So if you're an institutional buyer, a private equity buyer, foreign, family office, whoever you are, what are maybe 3 tips for a buyer in this market?
Well, one tip is focus on looking at your tenant. Look at your mix of tenants. Look at the leases that are written. I'm seeing properties that are coming out of 5-year leases now that were written back in 2010. Landlords were giving concessions then that they don't give now. We were in a different market then. So it's critical to really look at the leases, look for co-tenancy issues, look for exclusives that were given back during 2010 and 11. And weigh that as a part of the investment, part of the risk that you're inheriting. So tenancy issues are critical.
And 90% of our listeners are going to know what co-tenancy is, but if you're just driving down the road and you flipped on the radio, co-tenancy is when another tenant leaves, maybe an anchor tenant leaves, you have some rights to maybe reduce your rent or get out of your lease, and exclusives mean that you may not be able to sell certain things in your store because another store has an exclusive, and sometimes when those things don't match or there's problems, the new investor could have a problem with the tenant. So that's a good one. So what's some other tips for buyers?
Well, I always encourage buyers to look at location strongly, look at the neighborhood surrounding the property, look at ease of access. Shoppers generally like to be able to pull into a shopping center, park easily, shop and then get out. So location is important.
Especially if you're not paying and you need to exit, point your car right to the exit.
You're getting out quickly. But some tenants don't require the premium location, in the sense that if they're a service tenant, they might be fine on a secondary street. So it's not to say that you can't buy properties that are on second tier roads, for instance, but make sure that the tenants you're buying are destination oriented and market themselves and don't depend on the exposure for traffic, for instance.
End of the show, real quick, one quick tip for a seller in this market.
Be organized, have your files ready, take care of preventive maintenance before you put a property on the market. Properties always look better in a brochure than they do up front when the California buyer shows up, so watch for that.
John, thanks for joining us today. We appreciate you being here in Studio One.
My pleasure.
And thank you for joining us out there on the radio stations around the country, or maybe you're watching on YouTube, or maybe you're watching or listening on the show website. Thank you for being with us. Remember, you can check out the show on Facebook and on LinkedIn and on Twitter. All the links are on our show website, and you can hear all the shows from the past, so check them out. Until next week, next week we're talking about multifamily. You've got to join us next week, one of the hottest property markets in the country. Till next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, commercial real estate asset and occupancy solutions. Visit bullrealty.com. CCIM Institute, commercial real estate's global standard for professional achievement. Visit ccim.com/CRE show. Xceligent, providing verified commercial real estate information across the United States. Visit xceligent.com. Valuate, easily share what-if analysis online with colleagues. Visit getvaluate.com.